Good afternoon. Good afternoon. My name is Matt Sabulat. I'm the CEO of Cryptiv. At Cryptiv, we do two things. We create wallet systems for organizations such as financial institutions so that they can store and manage digital assets. And we also have our own private fund of crypto assets that we manage, which we may one day open up to outside investors. But today I'm here to talk to you about the challenges and nuances of being a trader in the crypto world. So I'm going to give you a little bit of background about myself. My background is in finance. I got a master's from the London School of Economics. And there they taught me about money, about gold, about the history of central banks. And that was fascinating. And it made me think of something. It made me realize that everybody loves money. Everybody goes to work every day to earn money. But very few people actually stop to wonder about what it is. What is money? Where does it come from? Why does it change in value? And that was always very fascinating to me. So before I get into the lessons, let me tell you how I like to frame blockchain assets. And the best way to think about blockchain is to compare it to something we all know and love, which is the internet. The internet, at a high level, is just a series of protocols that allow an individual to move data from one point to another over a series of computers. In a similar vein, blockchain assets simply allow us to move value from point A to point B over a network of peer-to-peer computers. That's all it is. And at a high level, that's the best way to think about it. Why this matters is because, of course, you can make cheaper, faster, and more secure transactions. And they're only more secure if you do it correctly. If you don't know how to handle these assets, it's not secure at all, and you might lose everything. But more importantly, this creates a new asset class that creates permissionless innovation, which facilitates innovation on top of value and makes it so that you don't have to snuggle up to a bank or a Visa in order to innovate with value, which is why this is so powerful. So gatekeepers, such as banks or Visa, need to really pay attention and be aware that there's a potentially disruptive force coming here. So I'll talk about some of these implications for what blockchain might mean to traders and capital markets. So first, I'll talk about the implications for traders. This is a picture of me in about 10 years ago when I first started trading. I started trading stocks, options, and derivatives right after I got out of school. And when you start trading as a retail trader with futures, it's actually very hard. Back then, the minimum that I could start with was $10,000. That was the minimum I could wire to my broker. The transaction costs were very high, between $5 and $10 per trade. And not only that, but I had to pay about $450 a month in data costs to the CME to see live feeds. And even after paying all that and noticing my account dwindle from transaction fees alone, I felt like I was always getting kind of screwed. There's these high-frequency guys that have microwave towers on top of the exchange, and you always feel like you're getting screwed by a few pennies every single time you trade. And then the software was Windows only and very expensive. So all that time and effort really just bought me this, a second-rate exchange that I could trade on, and I always felt like I was getting the short end of the stick. But today, things are quite a bit different. Today, if you're a young trader that wants to get started in the world and you're interested in crypto, well, it's a completely new world. There's no minimum balances. You can start trading with $50 as long as you've got Bitcoin or Ethereum. There's over 50 crypto exchanges where you can go and deposit coins within an hour or two and start trading. And the trading fees are very low. They're usually between 0 or 0.1%. And the data from all these exchanges is free. There's free API access, and there's open source software that you can use, which means you can test out algorithmic trading strategies. You can back test everything, and it's all free and accessible, and anyone can get started. And another really interesting thing that's just begun to emerge over the last 3 to 4 months is peer-to-peer trading. So peer-to-peer trading is very interesting because now all that you need is an internet browser and some tokens. So if I want to trade Ethereum or Bitcoin on Kraken, I send that Ethereum or Bitcoin to that exchange, and then I can trade with any other customer that's on Kraken. The difference between that and peer-to-peer trading is quite profound. In peer-to-peer trading, all I have to is a URL, and I have to have my MetaMask wallet full of Ethereum. And then I can start placing orders on a distributed peer-to-peer order book, and I never have to trust a third party with my private keys. And this is profound. It's in the very early stages of development, and it's a little scary to use, but if you think about it in the way that this could evolve, this could completely transform not only crypto trading, but also derivatives trading, options trading. All of capital markets could really change through these peer-to-peer trading systems. But you know what? Traders need something to trade. Traders usually trade stocks, they trade bonds, they trade things that were created by an entrepreneur to raise capital. So let's talk about the implications for entrepreneurs. Back when I got started, if you wanted to go raise some capital, you had to go to VCs. You had to go do a song and dance in front of venture capitalists. And with venture capital, geography really matters. It really helps to be in Silicon Valley. It helps to be in New York. It helps to have proximity to VCs. If you're an entrepreneur in Argentina or Venezuela, forget about it. No one's going to invest in your company because they don't trust the legal system in which you live. And elite VCs really saw the best deals. Think of Twitter, think of Facebook. Really, only the best VCs got into these, the Andreessen Horowitz, the Union Square Ventures. They got to see the best deals, and they got the lion's share of the innovative returns. And end users received no benefits. This is the worst thing about it all. I mean, think about Oculus Rift. Oculus Rift was bootstrapped by a Kickstarter campaign where people contributed millions of dollars to help support this company. And they grew the company, and they turned around and sold it to Facebook for $1 billion. The founders all made a lot of money, and it was great for them, but the early supporters ended up with a third-generation VR headset that sits there and collects dust. They got nothing for their contribution. And then this guy came along, Vitalik Buterin, the founder of Ethereum, which is considered by most to be the most successful ICO, and actually one of the first ICOs out there. If you invested in Ethereum in the summer of 2014, you took a bit of a leap of faith. It took them a year between the summer of 2014 and 2015 to actually create the network and launch it. But if you took that leap of faith and you invested in the summer of 2014, the valuation was about 18 cents per coin. And a year later, when it came out, it was worth about $1, $1.50. So a really good return, 5, 10x. That's very respectable. And as we all know, it's gone significantly higher since then. And all these ICO companies are trying to be Vitalik. They're trying to become the next Ethereum. And by most analyses, Ethereum may have been actually the best startup investment ever, especially when you consider liquidity. This is according to Balaji, who's a VC at Andreessen Horowitz and has his own crypto startup as well called 21.co, which has now renamed itself to earn.com. So in this new world, everyone's a VC, for better or for worse. End users can actually become economic stakeholders. You can incentivize people to find bugs through a bug bounty program, help spread the message of your product, help distribute this product to other people, which actually makes it possible to create new products like these peer-to-peer trading platforms, new markets, and new types of incentives for not just the shareholders, but for the people who contribute value every day to these products. And it's very global, very distributed, and in many ways it's unstoppable because it's built on cryptography that just doesn't care about anything but the math. And we can't talk about ICOs without talking about the B word, bubble. Is this a bubble? Are ICOs a bubble? Is crypto a bubble? There's certainly some bubblicious aspects to all of this, but bubbles aren't always a bad thing. The railway bubble created a network of rails that allow you to move people and goods from point A to point B. The internet bubble gave us Facebook and Twitter and Google and allows you to move data from point A to point B. So bubbles aren't always the worst thing. So I'm going to talk about some of the lessons that I've learned over the last 3 years of crypto trading. So the more things change, the more they stay the same. There's obviously new risks, there's new players, there's new communications channels, but there's the same old greed and fear, the same old try to buy high and sell low, even though most people end up doing the exact opposite. There are a couple different things, including the internet culture. Before you would communicate with people on a Bloomberg terminal who were the elite VCs or elite traders who actually had these terminals. But today, you go on Reddit, you go on Twitter, you go on Slack, and this is where all the communication happens. And memes live on. Look at Dogecoin, a self-proclaimed joke that's now worth about $250 million. And let's not forget that memes have been used by other people to, for example, Donald Trump, to help him win the election. Memes and the internet culture is actually very powerful and shouldn't be dismissed. And of course, there's new players. Developers are very, very important. They have a lot of power in this, and they're leaders in many of the crypto companies. Miners have a lot of power as well, as can be seen between the Bitcoin and Bitcoin Cash battle. And there's new whales that are involved. But this is a very young group of people that are heavily involved. And they believe in this certain ethos. It's very international. They believe in math and computer science. And in many ways, and excuse my French, there's no fucks given. Look at Vitalik. He goes to these important conferences wearing Dogecoin t-shirts and unicorn t-shirts to show that he's different. He's not a banker. He's not one of them. They believe in math. They believe in crypto economics. And I believe in crypto economics, which is an old idea of the invisible hand and market forces with a new twist, with digital value at its core, with cryptography at the foundation of what's happening here. And of course, there's new risks. There's hackers. This is what everyone is terrified of, and they should be, because you can quickly lose all of your assets if you don't take security very, very seriously, which is terrifying for institutional investors. So looking forward, you might be asking, what can I do? How can I get involved? How can I learn? My advice is get your hands dirty. Go buy some Ethereum. Go buy some Bitcoin. Go use a peer-to-peer exchange. Understand the nuances and risks involved in this new market, because it's unlike any other asset class. There's things that are very different, and you need to get on the ground and learn, otherwise you won't appreciate them. There's also this phenomenon of suits versus hoodies. And this is an interesting sort of paradigm that's been happening. The hoodies, the crypto freaks, what they're hoping for is an existential event that will wipe out all the bankers. That's the dream. That is what crypto is really about at its core. And that's what they want. The bankers kind of want to just have a new asset class and want things to remain roughly the same. And you know what? It's very dangerous to bet against change. You got to think about it. Who's going to be disrupted? Who's going to become the blockbuster of the crypto era? And there's a lot of candidates out there. So what can you do? Again, my advice is get your hands dirty, try to understand this stuff, but above all, don't be this guy. Jamie Dimon famously said in 2015 that Bitcoin is a terrible store of value when it was worth $500, and today it's worth about $10,000. So don't dismiss it offhand and really take this stuff seriously, because in my opinion, it's going to transform how capital markets work, how trading is done, how money is raised, and how people move value from point A to point B. Thank you very much. If you guys have any questions about our wallet system, please come find us. Thank you very much.